We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Willem Middelkoop, author of several books, including The Big Reset, which was translated into 8 languages, including Arabic and Chinese. He's a former journalist and the founder of the Commodity Discovery Fund. How are you today, Willem?
Great. Good to be back. Has been a few years. Yeah.
Absolutely. It's great to speak with you again. And I think this is a perfect time to kind of revisit this idea of a book you wrote called The Big Reset, not to be confused with The Great Reset, right?
That was Klaus Schwab's book, and that was published in 2020. So I'm the OG. And the subtitle of the book was The War on Gold and the Financial Endgame. And that's the financial endgame for the US dollar system as we know it. Yeah.
So Willem, what was the initial catalyst for the book? Like, why did you see at that time that you needed to write this book?
That was because my first book, which was only published in Dutch and Italian, and that was in 2007. In that book, it was published 12 months before Lehman collapsed. And I felt a great urge to write that book around 2005, 2007, because I had this very strong feeling that we were close to a collapse of the dollar system. Because of the buildup of debts, because of everything which was happening in the US economy after the internet bubble imploded, and we had this huge housing bubble. So I felt the need to warn people about a pending crisis. And that book made me world famous in the Netherlands because I was working as a Dutch market commentator for Dutch TV at that time. But we had a loyal but quite small audience. But after Lehman collapsed, the book was discovered by the Dutch mainstream media, and I was on every talk show every day of the week. So then my publisher asked for another book, and I wrote a few more books in Dutch, concentrating on the credit crisis, which was developing. But I always got the question, what will happen next, Willem? How can we solve this crisis? And I always said, I don't know. I was very lucky and happy that I predicted the great financial crisis, but I didn't have a clue myself. I was afraid of everything which would come afterwards. But by studying the system more and more, and I also became part of the OMVIF. The OMVIF is a London-based think tank of monetary experts. It's a meeting place for central bankers and the private sector. And I became introduced to the chairman, David Marsh, and I did so much research, and they were on the same topic. So they published a piece of research, I think in 2012, where they spoke about this move from a unilateral to a multilateral world. They pointed towards China adding to their gold reserves, and that really helped me to envision, let's say, the next phase for world's monetary system. And James Rickards was on top of that story as well. You might know him. So these people influenced me quite a bit. And then at a certain point, I came in contact with a new publisher. That was Amsterdam University Press, and they wanted to have a new book, of course, in English. And then I started to write this new thesis that we would transform to this new phase for the international monetary system, where China would be demanding a larger seat at the table. And I ended the book actually by stating 2 scenarios. The first was that China was willing to cooperate. Russia would be willing to cooperate with the West and work within the IMF to this new phase for international monetary system, where the SDR the currency basket of the IMF would be used as a successor for the dollar. But he also warned in the epilogue that we could also have a scenario where we couldn't find an agreement, the East and the West, and then it could turn into war. And I said that I hoped that we wouldn't end that way. And unfortunately, we're on a confrontation course now, and everything I see is pointing towards a much larger conflict. Actually, in a few interviews, I've already said that we're in some kind of hybrid World War III scenario now, where you have the West, and that's the Western allies, US and its Western allies, which have been the same group since the end, or since the Second World War, or since the end of the Second World War, because Japan, of course, joined the group after the Second World War. And then you have this other group, but this other group is much larger because, as you might be aware, over 140 countries worldwide, I think it's 160 now, didn't join the West in sanctions against Russia. Mm-hmm. So we have a group of over 150 countries, that's 6 billion people, who don't accept the US as the leader of the free world. That's troubling.
Mm-hmm. Well, we're speaking a lot about the book today. And, I just want to, I guess, preface for listeners that we're not trying to sell the book. We're just trying to have a discussion based around this, because the book is available on your website
for free,
for download at cdfund.com for anybody that wants to read it. So it's not like this is, an infomercial for the book. But again, this is a perfect time to be revisiting this idea and really re-examining it. So, with the benefit
actually, sorry, Tom, but actually I'm revisiting the thesis myself, because I've been in the process for the last 12 months to do more and more research, because this summer, I will move to Switzerland next week, where we have a house, and I'll do a lot of writing in the next few months to rewrite the whole book. First, I wanted to start a new book, but I will rewrite the Big Reset. I will rewrite every paragraph and sharpen the thesis. So where are we now? Because my last revision, I wrote the book in 2013, was published early 2014. I wrote a revision in 2016 where I added the Russian and Chinese side, a lot of information about that topic. And now, 8 years later, I think we're on the verge, or we're witnessing very, very strong and very important changes, which can lead to a full reset.
Mm-hmm. So is there anything in particular that, now having the benefit of hindsight, that you would go back and change? What is on your list of revisions that you really need to change from the first or even the second edition?
Very little, actually. The timing. You're always wrong on timing.
I think as gold investors, we can all share that sentiment.
Yeah. So on the back cover was around 2020, the system will be changed. And now we're in 24, and the system hasn't been changed, but we are seeing changes coming from the East, like Zoltan Pozsar, you might be aware of his name. Yep. He used to be with Credit Suisse. Credit Suisse is no longer there, but Zoltan Pozsar is, and he wrote shortly after the Russian invasion, "We're witnessing the birth of Bretton Woods 3.0, a new monetary system coming from the East, centered around commodity-based currencies." And so this was 2 years after 2020, and actually for me, his analysis is spot on. It's still the best on this topic, and he called for the start of the reset in 2022. So I wasn't that far off, but of course the full reset has still to be seen. And I was wrong in predicting that we might see the next phase of the international financial system centered around the SDR, where, like I said, China would cooperate with the US. And now we know that won't happen. Well, there's a very small chance that will happen because China understood that the West is not willing to share the system and the benefits with the East. And I think Putin and Russia and China both came to the same conclusion around the year 2013 that we had this Maidan revolution in the Ukraine, which was, of course, a US-sponsored colored revolution where Ukraine was, where Ukraine saw this regime change, which has happened in so many countries where the US wanted to see another administration which would be more friendly towards the West and US and the NATO. And at that moment, I think Putin and Xi, because President Xi, he arrived, he became president around 2011. So his power base became strong around 2013. So both Russia and China understood that you can't trust the West. And we should join forces to make sure the West is not able to kill us. And I think that's the sole reason why President Xi is backing Putin in a fight he doesn't like. Studying China and studying Xi a bit, I read his biography. China doesn't like wars. China fought very few wars in its history, especially in its recent history. But they understand when the West will succeed in accomplishing a regime change in Russia and getting rid of Putin, he might be next. China might be next. And Xi is a very smart guy. And he understood that if I'm successful in rallying all these independent countries in Middle America, Latin America, Africa, I could build a very powerful bloc, so powerful that the West can't fight us anymore. And that's the BRICS alliance, the BRICS, BRICS and friends. And that's a very powerful alliance.
I want to go back to something that you were saying, about Zoltan Pozsar's analysis and how he saw this playing out. Do you see the Bretton Woods 3 as more of a process rather than a particular event? And is this still evolving? We always say timing is never, let's say predictable, or, none of us have a crystal ball. And that's something as an interviewer that has conducted a lot of these interviews that becomes more and more clear to me. So is this more of a process rather than a particular point in time?
Yeah, I'm not interested in timing. Of course, as an investor, I'm very interested in timing. It's the most important thing. But from an intellectual point of view, the timing is not important. It's about the trend. It's about the direction. It's about understanding the process. It's about understanding which train you're driving and where you're heading. And I've been studying the financial system and monetary history for the last at least 25 years, almost 30 years. And I wanted to understand the system so I could benefit as an investor, and has done quite well. But the more I studied the system, the more I studied money and power, the more I understood how everything is connected. You can't study oil and energy without understanding the geopolitical situation. And now to come back to your question, the reset, Zoltan Pozsar and I are writing about, it is a process, and all these resets, also from the past, Bretton Woods 1.0 was a process. Mm-hmm. Actually, the U.S. State Department and other agencies started working on the new dollar system in the early 1940s already, 1942. So they were working for years to present a plan to the world, like President Xi in China has been working on his plan to present to the world, to present to the BRICS countries. And that took almost 10 years. And now we're finally reaching a point where you can see the outline of the system. And it was still lots is unsure. And if you study changes in the past, the US economy grew larger than the UK economy in 1870. It took another 70 years before the dollar became the world reserve currency. So these changes take decades, at least decades. Mm-hmm. But the process started around 2008. The fall of Lehman was a watershed moment. There's a world before 2008 and a world after 2008. Look at the central bank gold holdings. They were going down till 2008, and then they started rising again. And this process, I think when we look back in 2030, 2035, we'll conclude, oh, wow, lots has changed in the world in the last 10 to 15 years. Mm-hmm. But we're now in the middle of this process. We're at the start of this process. But as you might know, because you do these wonderful interviews, Tom, I listen to almost every interview you do every week. So I'm intrigued by everything which can be discussed about these topics, and you do one of the best jobs.
Thank you.
Your podcast, and that's not to become friends with you, but you really have these in-depth talks with everybody, and there's so much happening now, and as you might know, there's so much news every week to discuss. So the speed of developments. So when you see the picking up of the speed of all these developments, all this news, then you know there's the major changes are happening as we speak.
So let's go back a little bit, Willem. What makes gold the best hedge against, this changing reserve currency? And does this inherently mean that we will get a revival of the gold price because of that?
Yeah, gold has been a standard of, or the central theme of my work since I started writing at the late 1990s. I was very influenced by the work of the Gata guys and guys like Ted Butler, who passed away unfortunately recently. Ted Butler have been fighting the manipulation of gold and especially silver for the last, I think, 30 years. If you study monetary history, then you come to the conclusion that there's not one example of a successful fiat currency which lasted over 150 years. Mm-hmm. And even Marco Polo, he wrote a wonderful book. He traveled to the East, to the Far East, to China. And he mentioned that, what was it, the early 18th century, there was this fiat money system in China and Asia. And the guys running the system were, well, they had all the wealth of the world because they could print the money and buy everything, well, tangible. But also that collapsed. So there's not one example of a fiat money system which has been successful for a very long time. And like Voltaire, the French philosopher once said, fiat money always goes back to its intrinsic value, and that's zero. So as a student of monetary history and as a guy who had made some money in the 1990s in real estate, I knew I needed to hedge myself because the currency debasement was going to start in overdrive. And because gold has been the anti-dollar since 1971, we all know Bretton Woods started with the dollar as good as gold. Then in 71, the dollar was disconnected from gold. They closed the gold window. And since that point in time, gold is the anti-dollar. And because we live in this dollar system, your natural hedge is gold. And if you look at the returns on gold since 2000, it's on average 10% every year on average. And that's the currency debasement. So gold is the steady anchor. The value of the currency is changing. Gold is not changing. Gold is just keeping steady. Purchasing power is steady.
Mm-hmm. Do you see the gold standard as being the best way to constrain government spending?
In theory, it is, but I think it doesn't work well because it's not flexible enough. But I prefer, people always say in the Netherlands, Willem wants to go back to a gold standard. No, I don't want to go back to a gold standard, but a fiat system needs to be contained. So I prefer the system to be gold linked, or you need to link a money system to something which prevents that politicians and central bankers will bring the value of money down to the ground. And well, I'm not the only one. Your show is full of guests who have warned about debasement of currency for years, for decades. But we've seen it, after COVID. We had this superinflation. I don't want to call it hyperinflation. It's far from that, but I call it superinflation. Prices jumping 10, 20%. If you look at mining cost, I'm a mining guy, we invest in mines. The cost price to mine is up 40%, 40 in the last 4 years. Well, wouldn't surprise you, but so it's no surprise that gold went up a little bit more. So to make good for that debasement. And I think the biggest wave of inflation and debasement is still to come. Many people are feeling happy now that inflation came down to less than 5%. But I think this is we're in the eye of the storm, and the next inflation wave could well be violent again, maybe even more violent. And soon the central banks will need to restart QE. Even the Chinese started QE this week. So gold will be the natural hedge, but we have Bitcoin now as well. And I called Bitcoin. I've framed Bitcoin in the Dutch edition of the Big Reset in 2014. I said Bitcoin is digital gold, and I expected that people would flee towards gold and digital gold to hedge themselves. Well, it has happened, and Bitcoin has been the fastest horse in the race. So Bitcoin was a better hedge even than gold in the last 10 years.
I find it interesting as we're talking about these currencies that have all returned to their inherent value. You list all or a bunch of different fiat currencies in the book by duration, right? You go from, I think it was like weeks in some cases to over 100 years. But anyways, there's a big list in the book.
It's the only full list. It's the only full list, which names all the hundreds of fiat currencies, which all, expired or because of wars, but most because of hyperinflation.
Yeah. And that's the other interesting thing I found about that table is that you give the reason, whether it was war, whether it was, being taken over by another currency or a country that was adopted or hyperinflated away, right? Yeah. But I find it interesting that, as you said, gold might not be the, let's say, most perfect peg for a standard of a currency. I think we can make the argument that with the expansion of the currency, with the expansion of credit that we've seen over the last 50 years, this has facilitated a lot of the growth that we've seen. So, I think it's tough to make the case for a one-to-one gold backing, but we definitely need, I think it's also hard to argue against the fact that we need just a currency that can be printed at will.
Yeah, and the problem is, Tom, this is the first time in the history of mankind that we're in this boat together. This is the first time we see a debasement of currency at this scale and level worldwide. Even the Chinese started QE now. So in the past, if you study the history of hyperinflation, it used to be just Yugoslavia, just Zimbabwe, just Venezuela. And now you see the debasement worldwide. And that's why you see a run towards gold worldwide. If you look at central banks, there are dozens of central banks adding to their gold reserves. Even Nigeria is bringing their gold back home. Every country east of Germany is buying gold. Poland is increasing the gold holdings 10x. The smart money, the guys like Michael Saylor are buying the digital gold, Bitcoin hand over fist. And the general investor masses are still invested in the NVIDIAs, which is actually in a period of hyperinflation, in a hyperinflation scenario, even stocks will do well. And I think that explains actually why stocks keep running higher. Because if you study the history of hyperinflation, you will see that although there was economic misery in Venezuela and Zimbabwe, the stock market did well because it was much safer to hedge yourself buying stocks than keeping your money in a bank account. But if stocks will do well, bonds will lose a lot of its value in this debasement of currencies. And that's actually what we've seen happening now. Bonds came down almost 50%. And all this institutional money is still invested in the bond market. And here in Holland, we have an awful amount of pension fund money. And it's almost 2 trillion are pension savings, and half of that is in bonds. As by law they have to invest in bonds. I know a fund manager who's working for a smaller pension fund, and he tried to sell 10% of their bond holdings and buy physical gold to hedge, because he saw this coming as well. This was pre-COVID. And he had to discuss this with the regulators for 2 years. And finally, he was allowed to turn 10% of his portfolio and to buy some gold as a hedge. So the smart money understands, and the smart money is positioned, but the large funds, and there's almost 400,000 billion of investments worldwide. And if you look at the physical silver market, it's less than 30 million a year. Total world silver mine production is less than 30 billion per year. So you can expect this wave of paper money, fiat money, to flee towards hard assets. You can expect that wave to become much, much larger when this process is starting to speed up. And actually, I think we're very close now. We're very close. Look what's happening with the Shanghai Gold Exchange. We've seen all these visits by American bankers visiting the Shanghai Gold Exchange. We saw the premiums there. We've seen the bifurcation between the silver price in the East and the West. We saw the ETFs losing a lot of their gold and silver holdings over the last 2 years. So something has to give very soon, Tom.
So, Willem, what do you see as the replacement, let's say, for the dollar? And do you see it being backed by a basket of currencies like we're seeing from the BRICS currently? What is the structure of a currency that is going to take over?
Yeah, well, I stepped away from the idea that the SDR might be the successor for the dollar. It could still be, but more important now, and that's the thesis of the new edition of the Big Reset, that you'll have a bifurcation also in the world reserve currency market. You'll have the dollar, which will be the main world reserve currency still. But then you have this BRICS alliance who will start working on their own financial system, who might even work on their own reserve currency, or the renminbi might become the currency of choice for the BRICS countries when they start trading with each other. China is doing more international trade in its own currency now than in the US dollar. You see the BRICS countries adding a lot to their gold reserves, so it would be quite easy for them to have a currency linked to gold, connected to gold, and that could be very harmful for the West. So actually, it's a waiting game who will play the gold card first. The US might feel tempted because they have this 8,000 tons of gold in Fort Knox. Apparently, they have it. Nobody can prove it's not there. So I would be surprised when the US will return to some form of gold standard. As you might be aware, some people have suggested this already. So I'm not in the camp anymore that the dollar will collapse. The dollar will stay around. The British pound is still around. The British Empire, I haven't seen that in a long time. That hasn't been gone, but the British pound is still there. Mm-hmm. I think the same will happen with the US dollar, even if the US will leave its position as world's hegemon. The dollar will still be there. But the US might see the need to play the gold card, or they might for the first part of this, the first decade, they might to like a higher inflation and a depreciation of the US dollar, because that will help them to cope with their huge debts. Answering short, I don't expect one currency to take over all, mm-hmm. and of course, the US might like to use the SDR and the help of the IMF at a certain point, but nobody's talking SDR anymore.
Mm-hmm. Is it possible that we end up, it seems at this point that the BRICS currency is more of a trading currency for countries. It's not necessarily like an everyday currency that most people are going to use. So, as we're talking about Bretton Woods 3 being a process, is there a time period, as you see it, that we have the US dollar still serving this role to serve as a trading currency for the average person between countries, yep, while the new BRICS currency ends up being a trading currency between them?
Yeah, I think that's to be expected. So mm-hmm. For us, living in the Western world, not too much will change. And of course, the BRICS they need an awful lot of time to build the plumbing system. A good working financial system, a new financial system, a BRICS system. It takes a lot of time to build it, to design it, to build it, and to have enough liquidity. I think they just started, so don't expect them to take over very soon. But it will be a competing force, and it will take away market share from the dollar, but also from the euro. If you look at the latest international trade numbers, you see even stronger decline in the use of euros than the use of dollars.
Yeah, it's interesting to try to understand how all of these forces end up balancing out through this time period.
But the most important thing to take away, I think, is not to understand which will be the currency and when it will happen.
Mm-hmm.
It's about the trend. We in the West are in decline. The trend is going down. In the East, the trend is going up. They're getting stronger. We are getting weaker. And while we get weaker, especially in Europe, because in Europe, we are also collateral damage in the fight between the US and China. And the more they start fighting each other, we will be more collateral damage. I'm very afraid. A lot of people in Europe are very afraid for that, because the US always made us here in Europe to follow them, 100%, because we are allies and they liberated us 80 years ago. And that's also an interesting fact. We were liberated in 1944, 1945. Add 80 years is 2024, 2025. Mm-hmm. So from a fourth turning perspective, you have, I think you're aware of the book by Neil Howe, The Fourth Turning. You have all these large changes coming every 80 years. Mm-hmm. And that it just, if you listen to Neil Howe, he predicts there will be a lot of conflicts and wars until 27, 28. And then from a fourth turning perspective, from an 80-year cycle perspective, things might start to quiet down a bit.
Mm-hmm. Willem, what do you think can go wrong here? You just mentioned that China started QE again this week. We've seen China have issues with their housing market, with their credit markets, and I've gotten different answers on the state of their demographics problem as well. So with China being such a forward-thinking society and economy, have they set themselves up in such a way that this is inevitable despite any issues that they might have? Or is there a possible, what can still go wrong for them?
What can go wrong for all of us is really World War III, a large military conflict. So not this hybrid situation. Now we're in this hybrid situation. We're fighting each other, especially the US is fighting China. The US is fighting Russia, but the US is also fighting China. I'm here in the Netherlands. We have ASML. They produce wafer steppers. You need wafer steppers in these machines to produce computer chips. We're not allowed by the US to export these machines to China. And that it clearly shows there's financial economic war already. And I'm afraid that the West and the US is so arrogant that they think you can poke Russia and China time and again without them striking back. And we know China has a lot of self-constraint. It's in their culture. If you study everything President Xi has been writing over the last 10 years, 15 years, he's not a confrontational guy, but he's made clear that if the West keeps running towards a military conflict, he won't back down. Mm-hmm. And the South China Sea and Taiwan and everything happening there, it clearly shows he won't back down. So there's this risk, and that's what worries me most. I'm afraid that the US understands that the problems are mounting every year, and then it might be an escape for them. It's the wag the dog scenario to go to war, a real big war. So everybody will rally behind the president. And the US also understand that the longer they wait by challenging China in a military way, the more strong China becomes. So it's very hard for me to envision a scenario where we get less tension instead of more tension. And the tension is building. And I'm doing quite a bit of soul searching on this for the new book. So what scenarios can you expect to happen? But when pressure is building this way and the stakes are so high, and both sides have entrenched themselves so much, this can't end well.
Willem, you have several quotes in the book from George Soros about the problems with the dollar. Is it possible that he has a role to play in these shifts and has likely positioned himself to benefit as he did when the British pound was depegged?
Well, George Soros is, of course, getting of an age. It's like having Henry Kissinger. These guys are, they became adults in the Second World War, and then they built the system, understood the system. But now they're in the last, they are in their own personal end game. And I'm more interested in a guy like Ray Dalio now, who's a bit younger, who understands these changes very well. And I have some slides in front of me, and Ray Dalio, I was surprised to see this because we don't know Ray Dalio as a very alarmist guy or Goldberg scaring everybody. Mm-hmm. And he said the possibility of this turning into a brutal World War III stands at around 50%. And I don't think he uses these words lightly, mm-hmm. but we know Ray Dalio he thinks in trends, and he can. I never talked to him about this, but I think we have the same ideas that once you're on a track, on the road towards confrontation, it's very hard to back down, and the stakes are that high. The U.S. If you study the geopolitical position of the U.S., then it has been clear for the last 50 to almost 100 years that the great thinkers coming from the U.S. on geopolitics, they always said, Wolfowitz is one of them, they always said, we need to make sure that nobody can compete with us. And now China is competing. So, it has been their strategy for such a long time to stop any country reaching the point that they can really compete with the US. And I think the mistake the US made is by having so many conflicts and regime changes over the last few, decades, 40, 50, 60 years, that they lost all their friends in Latin America, almost all. Even Mexico wants to join the BRICS alliance now. They lost all their friends, almost all, of course not Israel, in the Middle East. Mm-hmm. They lost all their friends in Africa, and I can't believe I can't understand how the US could let that happen, because it look what China has done, to make friends in Africa. They gave them a railroad, they gave them an airport, they gave them a harbor. It's not that big money, and then you can make friends there. And we are commodity investors. We travel a lot to places like Africa and Latin America, and there are hardly any friends left for the US there, and that could make the difference.
Mm-hmm. Well, I think we can, anybody that's paying attention to these trends can see how the US has really used the dollar as a weapon over the last, 40 years against countries that it doesn't want to, as you said, kind of necessarily compete with. I think we can take Russia as a perfect example of this. When the Ukraine invasion started with the seizing of their assets, right?
You're right, Tom. But in the past, I'm old enough to remember that in the 1980s, at the end, when the Soviet Union, imploded, they used the dollar in a smart way. They used the future market in a smart way, to bring down commodity prices, to collapse the Soviet Union. This is all has been documented. Mm-hmm. So there was this agreement between Thatcher in the UK and Reagan in the US to use financial markets in a smart way. But now it's so openly, the weaponization of the dollar is so openly just stealing financial reserves of a country. How can you expect other countries not to react to that? And when the US can weaponize the US dollar, but other countries can weaponize gold. And I see that happening now. Gold is being weaponized. And that's why gold has started to break out of this very long trading range. And I think that's the start of something big. So the weaponization of gold. So that's why I also said earlier in this chat, the US might be tempted to go back to bring gold back into the system, to avoid to circumvent that the BRICS countries can do it first. So and then it gets very interesting for us as investors, of course, because 50% of our investments are gold related, but we have also 15% silver related, and we haven't talked a lot on silver yet. But silver is an accident waiting to happen. I've been talking about this for a long time, but now look at the deficits developing in the physical market. And you can play all these paper future games on the COMEX and LBMA or whatever if you can't supply the physical metal. And now silver is being used in the solar panels in a big way. The silver deficit, the physical deficit in the silver market is expected to be 200-300 million ounces per year. And if investors start to flee towards silver because it's also a monetary metal, I've built a billion web shop myself in 2008. I know the silver market quite well. This is a very, very explosive situation. So everybody's always talking about gold. I'm much more interested in what will happen to silver. It will happen first with silver, and then it will happen with gold.
Really? Why do you think it's going to happen first in silver? Because of that deficit issue? And the let's say the easier accessibility for the average person because of the price per ounce?
It's about the small size of the silver market. As I explained, world silver production is less than 30 million. That's a fraction of the gold market. So a few billionaires can really corner the silver market now. And silver is being used as a commodity. It's being used in the industry. 60-70% of all silver being produced is used now in the industry. That's not the fact with gold. Most gold is moving from underground to a vault somewhere. Is not being used, and gold is so expensive that it's always recycled. While we lose a lot of silver, And there's another important fact: central banks, the vaults are full of gold. They don't have any silver. The only silver left is with the ETFs, which, of course, is being used and financial tricks are being played. But once you get a shortage in the physical market, and look what happened to palladium, Tom. We saw the same in palladium. There was a very huge open interest in palladium around 2015 and 2016, just like silver, platinum, and gold. Huge open interest. Many paper shorts. And then the market needed more palladium because of the start of the success of the hybrid cars, and you needed for the exhaust systems, you needed palladium. So there was a lot of extra demand in the physical market. There was a shortage of palladium, and then prices jumped 4x between 2017 and 2019. And the open interest in palladium futures, I have these slides, I can send it to you, came down by 80%. And that shows when there's a physical shortage in the market because it's needed in the industry, things can happen very fast. And expect or imagine yourself what will happen when the Reddit crowd and the Wall Street Silver crowd understands, well, the Wall Street Silver movement came from the fact that they understood that this is a market you can corner. They tried it and they failed in the first time. But imagine when hedge funds and retail investors understand it's finally happening. Silver is about to break $31. Then it will move to 40 quite fast. Then expect a move to 50. That's a triple top. Then it will take a pause. But once it crosses 50, everybody in the world wants to get ahead on silver. We try to find silver stocks. I can't give you 10 names of good listed silver companies. Even Silver and Wheaton is 50% gold company now. Mm-hmm. Even First Majestic is a silver gold company now. So silver, because silver has been depressed, manipulated down for, I think, 50 years now. Mm-hmm. There has been a production deficit for almost 50 years. We had all these old silver coins worldwide, and they were all melted into new coins and bars. And once that's gone, it will be a violent move. And I think central banks and governments can't do anything about it.
Well, William, you bring up that no central banks really hold any silver. Is this mostly due to the fact that to carry a similar amount of value for a central bank, they would have to have an unbelievable volume of silver that takes, much more space to store?
I don't think it's about that, but if you study the financial system, the history of money, then a gold standard has been the standard. Mm-hmm. We have seen a few silver standards. China has been on a silver standard. But gold is much more easy. The value in gold, if you look at the mass, is so much larger. So if you study all the elements, gold is the best to use as money. Silver is the second best. Mm-hmm. So because of this, central banks, they had gold. They weren't even thinking about silver. Silver is not important. Silver is not important to anybody except the producers of solar panels, LCD. If you use silver, in every iPhone, there's almost a gram of silver. But I travel in circles of central bankers. Gold is being discussed. Silver, I've never seen a discussion on silver. Never. Mm-hmm. Nobody. We talk about it, Tom, as investors, but mm-hmm. nobody's interested in silver. And that's, if you look at the tax system here in the Netherlands, if you want to buy an ounce of gold, you don't pay VAT because gold is seen as money. Silver has a VAT, it's 21% here in the Netherlands, because it's seen as a commodity. So that shows, that's telling.
Mm-hmm. So, Willem, I want to go back to something that you said about trying to find silver miners. You said that you can't even name 10 that you feel that are a reasonable, let's say, company to invest in. Is this, partially due to jurisdictional risks? Is this because of, being not pure silver plays? Like, what is the reason that these silver mining companies are so hard to come by in your?
There are no silver discoveries. Mm-hmm. There are no silver discoveries, and the price of silver has been depressed, has been manipulated low for so long. There's no incentive to go out there to hunt for silver. So there's no incentive for an exploration company to go exploring for silver. You take the same risk when you explore for gold, but gold is much more valuable. So some people have been lucky and have found some silver almost by accident. Mm-hmm. Aya Silver is a good example. Well, of course, they knew what they were doing, and they found an awful lot in Morocco. fully valued. I think right now we made quite a bit of money on that one, but I can't give you 10 good new silver discoveries worldwide. Mm-hmm. So we know one in Australia which looks interesting right now, but still has to show with drilling that's really a good project. Then you have the guys in Morocco. You have Hercules Silver in Idaho, but they're finding copper now, so they forget about the silver. They're concentrating on the copper. Mm-hmm. You have a few places in Nevada, and then of course you have Mexico. But Mexico is becoming a failed state in a way because of the narco trouble. So there are not that many companies willing to invest a lot of money in Mexico, and of course Mexico has a lot of silver. Peru the same. We have a position in Tinka Resources. It's a tin, silver, zinc, lead discovery, polymetallic. But well, of course there are some Peruvian producers who want to buy that asset one day down the road. But no Western companies want to enter Peru now to look for silver. So everybody's looking for copper. So the big guys, the BHPs, the Lundins, they all want to look for copper. They want to look for gold, and then maybe some lithium. But it has been a very small world because the valuation of mining-related equities and companies have been coming down for the last 15 years. So everybody is very risk averse. Mm-hmm.
It's interesting to see these political changes, especially as you mentioned, Mexico, being all of the sudden with the election of the new president being very left-leaning, being very anti-mining, right? And it shows how fast these things can change too.
Well, look what happened in Panama. Panama Cobre was one of the large new copper mines worldwide. It was built in Panama. It was just in operation for a few years. And because of, some leftish anti-mining sentiment, they had to close down. This was a 10 billion investment by First Quantum. And it was 2% of world copper production. Because of this closure, we have a copper deficit in the copper markets now, which sent copper up quite a bit. So we see the same sentiment everywhere, not in my backyard syndrome. Nobody wants to have a mine built in any place near. Then you have these accidents happening, like with Victoria Gold now. You see sometimes some accidents that you have a landslide or whatever. Lots can go wrong, and that's. But from an investor, and we, of course, I'm a fund manager of a commodity fund. As an investor, this is such an incredible point of time because we have a perfect storm for commodities developing. You have this high inflation, so people will start to flee towards hard assets. Commodities, one of the best of them, the 1970s have learned. Then you have this East-West tension between the geopolitical situation, we discussed that, and then you have, of course, the debasement of currency. We could have the gold revaluation, but on top of that, and that's the most important fundamental trend, and we're always looking for the big trends. The shortages in commodities are starting to happen now, and the shortages in commodities will grow larger and larger every year. Mm-hmm. And after 25, we've done a lot of homework and studies on supply and demand. And you have all these different metals. Uranium market is a totally different market than the diamond market or the copper market or silver. But if you study the supply and demand fundamentals on all these commodities, after 2030, I think 70%, 80% will show production deficits. After 25, 30-40% of the metals will show production deficits. And once you have production deficits, you can't print copper. Mm-hmm. You can't print silver. And if we want to get to net zero in 2050, we need twice as much copper than we have produced since the start of mankind. So the next 25 years, we need the double amount of copper which has been produced for the last 2,000-3,000 years. We can't do that. The industry can't do that.
Mm-hmm. So, Willem, branching out from just the idea of how important commodities are, what is the balance, let's say, what are the percentages as you see it of your ideal portfolio in this time? Of course, you mentioned bonds losing a lot of their value and having that insight. Obviously, you're probably not going to want bonds in your portfolio at this time. How do you kind of structure your portfolio with this information?
Yeah, well, if I look at my personal portfolio, that's not related to the fund,
Mm-hmm.
then I always use 25% in equities, 25% in real estate, 25% very liquid cash/Bitcoin, 25% in physical gold and silver. And this is my model portfolio for people who have a net worth between, let's say, 1 and 20, 30 million. This will make you survive almost every crisis.
Mm-hmm.
And I see too many rich people who have everything, almost everything in real estate, or everything in the stock market, or have everything in Bitcoin. I know guys, 20 million just in Bitcoin, and almost no other investments. Well, I think that's crazy. Well, you've done well, congrats, but take at least 50% out and diversify.
Mm-hmm.
And real estate is, of course, very overvalued in most markets, but in a super inflationary scenario, real estate the price will keep going up because there's a shortage there as well. There's a shortage in almost every hard asset, even in real estate.
Mm-hmm.
But bonds, you can trade bonds for the short term, but it shouldn't be part of a portfolio longer term. Well, maybe if you like high yield bonds to make a return. Equities are overvalued as well, but not all equities. If you look at commodity-backed currencies or equities, if you look at the listed base metal producers, they have a PE of around 10. So if you compare that to Apple, which has a price earnings ratio of around 30, which called cheap in tech. So don't never think there's just one equity market. There are always different parts which are overvalued. There are parts which are undervalued. So equities should be part of your portfolio, and then of course some Bitcoin and some physical.
So, Willem, looking forward a little bit here, we've discussed a lot of topics today. What do you feel are some signposts that you're looking for to really see this more momentum pick up in this change away from the US dollar?
Well, what I'm watching like a hawk is everything which is happening in the relation between the US and China. Mm-hmm. So we've seen many people from US politics, world of finance traveling to China. I haven't seen almost anybody traveling from China to the US. Well, mm-hmm. President Xi made one trip. But we've seen Janet Yellen, Secretary of the Treasury, traveling to China twice. I'm watching like a hawk what is happening with the US Treasury markets. They need to sell so many treasuries, and the foreign buyers aren't there anymore. Even Japan stopped buying treasuries. China stopped buying treasuries 10 years ago. Russia sold all. So there's excellent waiting to happen. So I'm watching the financial markets because it's all going too smoothly. If you look at volatility, it's priced too low. So I'm afraid we're in for another period of higher tension, maybe even crisis, where making our portfolio more conservative day by day. Behind us is Ben, our trader. We're adjusting our portfolio, becoming less aggressive, more conservative, moving towards positions which have more liquidity. And we even started to buy some volatility products, which can help us when markets turn south again. And I think the second half of the year, well, we just started the second half, but September, October, November, well, could become interesting.
Absolutely. Excellent, Willem. Well, I think that's a good place to kind of wrap up for today. Is there anything else that you'd like to leave our listeners to think about, or let us know when the new version of the book might be out?
Yeah, well, when people are interested to follow this, they can follow me on Twitter. I have quite a large group of followers there, and I spent quite a bit of time to keep people up to speed. What I like, what interests me. But if people want to take dive a bit deeper into the reset process and what to be expected, I stopped giving everything away for free on Twitter and start my own Patreon page. And that's dedicated on people who want to follow the reset stuff. And it's 15 euros a month. I'm not getting rich by producing that stuff, but I got fed up by giving everything away for free. So I think people should pay a decent price for some good information. People can always subscribe to our newsletter at the Commodity Discovery Fund. And our fund is open to investors worldwide. Everything is cheap now. Valuations are insanely cheap. So everybody is welcome to have a look at our website.
And of course, the website, cdfund.com, and your Twitter handle at W Middelkoop, Middelkoop. Willem,
just Google my name. You'll find all the information, and people can download the Big Reset for free at our website. So,
absolutely, Willem. Thanks so much for your time today. Really appreciated getting to have this discussion with you.
Thanks, Tom. I enjoyed it myself.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.